Hi guys, welcome back. I hope you're well. So this is basically on how to get perfect forex entries or how to build your strategy. So this is on the Euro CAD, right? And now it does look like a messy pair, but think of it. If you want to know how to get perfect entries, and I always say this, if you listen, it's the 1 hour is a good place to start. You don't want to go to the 4 hour, you want to go to the 1 hour, because things start to appear on the 1 hour. And what I use for perfect entries is a divergence. So what do I mean by that? Divergence, basically, I've done videos on it, but this is just a quick introduction. What it is basically the charts will show one thing and an indicator will show something else. It doesn't have to be the TDI indicator, it could be the oscillator, it could be the RSI, it could be MACD, whatever it is. The indicator shows something different. Or think of it like a W, right? Like for William, right? So W here, and then the second leg will be your entry. So once this starts going up, that's your entry. So it's a double, it looks like a double bottom, right? Or it can be a double top if it's a sell opportunity, right? So say you've picked it up, you're like, this is the divergence, you enter on the 1 hour, things are looking good, Now the next question is, how do you hold on to trades for long? You really have to understand the trade cycle, right? So if this is the double bottom, or say it's a divergence, which is more accurate, it's a divergence. It shows a reversal or the start of a cycle. So this is the divergence. It starts the cycle, and you're basically holding. Where people get freaked out is when they see these pullbacks, right? And then they close their trades, or once they get here and then they close. I wouldn't do that. What you should do is really understand the cycle. So it started off with a divergence, and what this basically is a continuation pattern. So what you would be doing instead, right? This is too early to be trailing your stop loss, because you'll be asking to yourself, okay, how do I trail your stop loss? If you had trailed your stop loss, basically, let's say it started moving up, you brought your stop loss here, you would have been taken out, right? I don't know how the markets know it or how they do it. You would have been taken out. And even at 11 o'clock, 12 o'clock with spreads, you would be taken out. So basically what you should be doing here is seeing a continuation pattern, right? So basically price is trapped within this triangle here, and what you should be doing is looking for a second entry. So this is where you place trade number 2. This is where you place trade number 1, trade number 2, and then this is your take profit. So I just want to measure the leg of this flag, or it's a continuation pattern. You should know your patterns. Here we go. So enter trade number 2 on Monday, and then close out your trades. At this level here. Right, seems quite simple. Now this is when you would use trades like this to build up your strategy. So you would say, okay, my strategy is simple. I trade the market cycles. And then once you start and you say, this is my strategy, I trade the market cycle. It starts off with the divergence. You enter, look for a continuation pattern, and add a second trade after a continuation pattern. So it's called pyramiding. Pyramiding is basically when you get a pullback, you enter another trade. When you get a pullback, you enter another trade. So you are actually adding pyramid trades. So basically you would be saying, I trade the market cycle, long-term trader. You could say you're a bit of a trend, you're a reversal trader, because really the divergence is a reversal, right? And you are trading the market cycles. That is true. And you are pretty much a reversal trader. I wouldn't say you're a trend trader, because trend traders would really just be trading this downpull here. So you're asking yourself, okay, why wouldn't I be a trend trader when you can see this huge move? Here's why. This move and trend trading, why it's very difficult, is because with moves like this, they happen really quickly and rapidly. These moves here, can you see this is the beginning of January, beginning of Feb. This is an entire month's trade. This is within 10 days, right? This is an entire month's trade, and this is within a minimum of 10 days. So you can see that, number one, you aren't paying as much spread swaps, and you reduce your risk, and you can actually add 2 trades. The problem with trend trading is people be like, yeah, at the pullback, add a second trade, at the pullback add a second trade. But I can tell you now it's very difficult, because it's not like this moves smoothly. If you had added a second trade here, you would have been stopped out, right? So then you'd add another trade. Okay, pulls back, and then you would have been stopped out. So it's really difficult. It's not that easy. It's not as easy as people make it out to be. Is there anything else I haven't covered? So we've talked about your reversal, the cycle, continuation, and then pretty much you close out here. That's basically the intro to your strategy. Thanks, guys.